Yeah, hello and welcome to another update video about Bitcoin. Bitcoin, extremely interesting development here today. We came down a little bit lower. Yeah, we did expect that in the previous video. The only question was, do we hold here at this $19,831 level? Exactly here, this red line, still there from the previous video, and this did hold as support. Now, or do we actually go lower into this yellow target area? Yeah, because those were two scenarios. And I won't repeat them all because it would just confuse people. But the thing is, as long as we hold here this $19,830 level, we can start from here. And there is a potential that this was an ABC correction already. Yeah, that the wave B was complete, the wave C already, because we did go below the low of the wave A. Admittedly, the wave C would be a little bit too short, or not necessarily too short, well, it would be quite short. And how would we know that wave C has ended? And with that wave C, also wave 2 has ended. How would we know that? Well, okay, there's never 100% guarantee, but good chance for that would be to break above the wave B high. So if we go above 20,863, my expectation would be that the wave 2 has ended and that we are already in a wave 3. But what needs to happen is ideally here an impulsive move up and a move above the wave B high. That then will indicate with a good likelihood that this wave 2 is ended and we are already in a wave 3. Okay, so let me just take that out. If we then are in a wave 3, this would really lead to a rally, and we would definitely break through this resistance level here, because a wave 3 would need to reach the 1.618 Fibonacci extension level, and that would be, if the low was this one, yeah, then we would get to $26,550. That would be the minimum level here if we go impulsively above the wave B. Now, this is not guaranteed, but this would be a good likelihood that we will do it then. Yeah, so first of all, going above that level, that's the first indication, and then also would need to break above the wave 1 high at 21,707. However, yeah, we can currently see here a head and shoulders pattern, and this is how you can actually see Elliott Wave and traditional pattern trading work together. Yeah, so we've got a head and shoulders pattern here, and the count ABC. Normally you would expect the wave C to be, well, at least the same length at the wave as the wave A, yeah, or around the same length. That would suggest the wave C is going to be a bit longer. So if that is going to be a bit longer, in that head and shoulders breaks, that will push us obviously down. Let's see where that wave, where that head and shoulders, just purely based on that target, would actually take us. So we take here the height of the head added to the breakout point. That would actually push us below this yellow target area, yeah, to that swing low here around $18,000. That would be the target purely based on the head and shoulders pattern. Would that be also a significant Fibonacci retracement level? Let's take a look. Yes, that would be the 88.7% Fibonacci retracement level. And you can see how perfectly this hits the 88.7% level. Now I can't rule out, I've got my target area here, which, let me just think. I just need to adjust a little bit down because for some reason it's a bit off. So there. But yeah, I could certainly increase the length of that down, but I'll just keep it where it is. But we know that the head and shoulders target would go even a bit lower. So this yellow area is just for the highest likelihood, in my opinion, based on the Fibonacci retracement levels for a wave 2. Also, if I take the, because what we can do, we could take the length of the wave A, add it to the high of the wave B, and that would give us a target for the wave C, which is exactly here at $19,074. That would, on the other hand, also be the 61.8% Fibonacci retracement level. So we've got a confluence here. So I would think with a good likelihood, if we lose this level here at 19,850, that the $19,000 level will be significant support and could be the end of the wave C. Yeah. So watching that level, all eyes need to be on that support at 19,850. If we go below that, then I think 19,100 will be the target. Yeah? 61.8% FIB level, and on the other hand, the 1-to-1 ratio here of the wave A and the wave C. But again, if we go above the wave B already now, yeah, it indicates that the wave C was just a very short one, and it would indicate the wave 2 is already done and we already move up in a wave 3. These are sort of the two options, and therefore those support and resistance levels need to be watched very closely. At the moment, there is a case for the low was already in here at $17,500. I have to say very clearly to you, it is way too early to confirm that. Yeah. And until we go above this red resistance area here, I won't see it as primary expectation, but it is just there, this option. Yeah. And it is there for the first time really for the last 7 months. That is why I'm a bit excited. But of course, we want to see the evidence in the Elliott Wave patterns, which we don't see yet. Yeah, there are indications, there are first sparks of hope, but there is no proof yet, no evidence in the chart, just indications. And I want to point these out to you because it won't get any clearer. Yeah, I said that to you a few weeks ago. There will not be the point when we, for example, reach a significant low where I will tell you the low is in now, buy. It will not get clearer. Long term, we are in very interesting accumulation phases. A lot of indicators just point towards that we are in a significant accumulation phase. Yeah. And it's just, anybody who's invested in the long term but doesn't buy now, please don't complain when we move up to 30, 40,000 that you missed the low because you waited for Bitcoin to be $1,000 lower or whatever. Yeah. So just be aware of that. That is entirely your decision. At the moment, it's a bit of an unclear picture, but what I can tell you that really for the first time in the last 7 months, I see here some bullishness, which I didn't see throughout this whole downtrend. Yeah. I've been very clear in this whole downtrend that we have to go even lower, and we did, and we hit my target area. We even went a little bit below that, and in the end hit all the short time frame Elliott Wave counts. So from that point of view, I'm happy. Yeah, what has to happen now is that we need to get some bullishness in the chart, and we need to see further evidence in the Elliott Wave patterns, and we need to break above this resistance area above 23,330. Now again, what does it mean? Does it mean it needs to go up now? No, of course not. I can't rule out at the moment that we could even go lower. This is actually still very likely, and it is actually still my primary expectation. It has to be, we have to expect still lower levels. Doesn't mean they have to come, but we have to still be very, very focused, because while there is a first potential to the upside, it's in no way guaranteed this is going to work out. It is still so early in a potential uptrend that without a doubt, this could still turn around to the downside. And in that case, we would have to probably see what is coming up here then as a wave 4. So it means that wave 4 you might have never been finished, that we're still in this wave 4, and then the wave 5 will still come down later. That is sort of the bearish wave count. But really, until we break below, honestly, below 17,500, we can for now be a little bit more focused on rising prices. That is also a little bit related to the indicators that I presented here a few videos ago, because some of these indicators are already pushing up. Showed you earlier, I believe, on the 4-day chart, the MACD, which is starting to push up. The 4-day MACD, honestly, when that is starting to move up, that means high alert. Honestly, that means high alert, and it is starting here very slowly, but we already have a bullish divergence on the 4-day MACD. When that is starting to move up, it means be aware. All eyes on that MACD and on the price. Too early, really, but we have a first reduction in momentum here on the 4-day MACD. All right, so hopefully you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye.